You guys have somewhat recently become, quote, a fully self-clearing broker dealer. I kind of know what that means. I'm pretty familiar with market making, but it might help just to hear it from you about why it's important that Alpaca is now a self-clearing broker dealer. And also, if you could just tell folks listening who aren't as familiar what a market maker is and why they matter.
Yes. When someone buys, for example, NVIDIA stocks, the things happens as the trade is executed, which trade execution means that we're basically deciding the price when this person A buys the NVIDIA stock at what price. And then after that price is decided, actual exchange of the NVIDIA stocks with the cash that person A pays, that process is basically called trade clearing. So in terms of the the first one, trade clearing, like companies like us who are behind the scene, there are multiple layers of the businesses actually that's built up on this financial industry system, because maybe while you're interacting with your app or businesses may not have the full integration into the deepest core of the booking records, which is the DTCC. The finance services is it's always relying on each other. So you outsource this licenses, you outsource these functions. It's really connected everywhere. So with that said, us being at the very much one-stop shop, having all the licenses and membership, it reduces the fees that we have to charge because we're not outsourcing anything to anyone.
Does it also allow for tighter spreads when you offer a price for a particular equity?
So in terms of the tighter spreads, it becomes more of the yes, exactly, definitely, because when we are pricing back to our partner brokers, which who is going to basically charge back to the end customers, the fee that we are getting charged from those systems become the basically the lowest in the industry, because if you own everything in terms of the licenses and then also the systems, and also this is the interesting part. Most of the financial services company, most of them, they outsource the system because they are not tech companies, so they don't build stuff, which means it creates a lot of overhead and unit expense, which we don't have. So we can offer the tightest price, basically, logically speaking.
And just to clear up an acronym, the DTCC is the Depository Trust and Clearing Corporation.
That is correct. Yes.
And you said you were a member of it. Does that mean you guys have an equity stake, or is it a partnership? How does that work?
Yeah. So it's not like an equity or partnership, but there's so much application process that you have to file. So the DTCC basically allows us to be a member. Same as being a bank, becoming a bank or becoming a broker dealer. You have to prove and you have to show that you have all the compliance ready. You have all the risk system ready. You have all the right people ready, and you have enough capital ready. So the DTCC welcomes you as the direct member that's connected to the DTCC system.
So I'm curious if you could just give me a bit of an overview of the last couple of years of adding new customers from you guys and how they're adding end users. Just what's it been like in the last 2 or 3 years?
Yeah, so surprisingly, and thanks to our teams are working really hard. We've been more than doubling revenue last several years. I always do admire what the Vlad and Beju did in the Robinhood. Obviously it's always being talked about and paid attention to. But they have been always kind of making a way, creating new things, really focus on what comes next. I think the reason why I wanted to bring up the example of the Robinhood is that there is always a continuous innovation on the B2C products. And then the players who are good continue to add new things to continue to grow. So that's the kind of the proof point that I see from the Robinhood. And the second thing is that by looking at the Robinhood, there are many other following Robinhood types of applications, not only in the United States, but also outside the United States. That's maybe few years behind, or 5 years behind, or 7 years behind, which means that the growth curve is happening in a very different diversified way in terms of the revenue, assets under custody growth, and that's built on top of us. So we see that growth very diversified. So that's why we see very constant growth of our revenue and assets under custody, regardless of the despite of the situations that we see.